Good morning and welcome to BWA TV. The Morningstar reports a compelling just reopened international stock fund. The following is our latest fund analysis report for FMI International. Morningstar Premium members have access to the full analysis report, such as this for more than 1,000 of the largest and best mutual funds. Not premium member, you can also get full access to that. Now on to the article. FMI International capacity, conscious and cautious but effective strategy merits a Morningstar analysis rating of silver. Prior to reopening in April 2018, the fund has been closed to new investors since May 2017. FMI keeps tabs on liquidity in the fund's 25 to 40 stock portfolio and doesn't hesitate to close it to new investors to preserve its flexibility and invest in stock with at least $4 billion market cap. A hefty weighting at the lower end of the market spectrum isn't inevitable here, but the portfolio's 17.8% combined small and mid-cap stake at year-end 2017 ranked in the foreign large blend Morningstar. Categories top third. The fund uses the same risk-averse, value-oriented, and team-based approach as its domestic siblings, but one adapted to international investing, positioning in non-US development market firm takes up a bulk of the fund's asset and management considers company, as well as revenue sources in building them. The IT consulting service provider Accenture, which is ACN, the fund's top holding since year-end 2014, trades on the New York Stock Exchange, but the headquarters is in Ireland, and more than half of its revenue comes from outside of the United States. So this particular company that we're discussing right now, Accenture, is actually an Ireland company, but it is trading on the New York stock exchange, and it's basically taking over a large percentage of the company. Now, concerns about transparency and accounting have kept the fund from buying mainland Chinese as well as Russian companies, but it hasn't avoided emerging markets stock entirely, counting South Korea and Taiwanese firms. The fund had a typical 9.4% emerging market stake in the late 2017, and it included a top 5 position in Samsung Electronics preferred shares, which management thinks are a bargain given the firm's robust semiconductor business. The fund's policy of hedging foreign currencies exposure means it seldom moves in lockstep with its category rivals, nearly all of whom are unhedged indeed. Currencies inflections can have a big impact on category rankings in any given year. A plummeting US dollar in 2017 led the fund to trail a 99% of its peers. The fund, though modest, lagged the MSCI EAFE 100% hedge index that year, and its long-term risk-adjusted results remain superior to the benchmarks. Now, the process pillar. The fund receives, and this is what the process pillar published April 11, 2018. The fund receives a positive process pillar rating for its use of FMI's firm-wide, collaborative, high conviction approach. Focused on the non-U.S. stocks with market caps of $4 billion, it looks for companies with durable business models and strong management to generate superior profitability through all full economic cycles. The fund's policy of hedging foreign currency exposure highlights management's focus on underlining business fundamentals. In consultation with CIO Patrick English and Research Director Jonathan Bloom, members of FMI's Portfolio Management Committee appraised potential investments based on what it would cost to acquire them outright. They pay close attention to historical valuations versus peers, and the MSCI EAFE index, but they only buy stocks trading at a minimum 1/3 discount to their estimated intrinsic worth over a 5-year holding period. Such bargains tend to occur because of controversy, uncertainty, or short-term headwinds. The team typically shies away from firms with high debt levels, but will buy those whose cash flow are steady enough to support their leverage. The team trims and sells stocks as they become fully valued. Meanwhile, steep share prices spur reevaluation. If the stock presents an even greater bargain without undue risk, management buys more. If something is amiss, they sell. Annual turnover has ranged from 9% to 26%, well below most foreign large blend peers. The fund holds a focused portfolio of 25 to 40 stocks because few companies meet management strategies, investment criteria. The team, though, keeps a watch list of good business, so they are ready to act if shares dip in the bargain levels. Cash is residual of all the investment process. It has above 15% since late 2016. Individual position size typically range from 1% to 6% asset based on the valuation and fit within the portfolio, and management considers companies as well as revenue sources in building them. IT consulting and service providers, Accenture, the fund's top holding since year-end 2014, trades on the New York Stock Exchange, but the headquarters are in Ireland, and more than half of the revenue comes from outside of the United States. Concerns about transparency and accounting have kept the fund from buying mainland Chinese as well as Russian companies, but it has not avoided emerging market stock entirely. Including South Korea and Taiwan, emerging markets exposure peaked at 11% of assets in March 2014, but has stayed in a single digit since. Sector over and underweighing versus the MSCI EAFE index can be massive. The fund tends to favor industrial stocks because it finds bargains among sectors, often cycling business. At year-end 2017, the fund's 26% industries stake was 11% points more than the indexes. This company seems like it is very powerful. It has a great strategy and it is sticking with it. This is something to consider when we are thinking about forming like our small investment groups or even getting into the investment field of doing some investing. This basically teaches me a whole lot about strategy. This company has a strategy and they're not willing to defer from it. They say if you don't fit our criteria, then just go ahead and keep it moving. We have money ready on hand whenever there is something that we need to purchase. And this company is making, even though it's trading on the New York Stock Exchange, and we're speaking of the FMI, no, it says Accenture is one of the fund's top holding since 2014, and it's not even an American company, even though it is trading on the New York Stock Exchange, but it makes more money out of the United States. This is big money, and this is what we're talking about. These are the things that we will continue to put into our perception so we can be more aware of these things. I am Royal Justice, reading you the Morning Star Report, and thank you guys for tuning in for BWA TV. I'll check you next time.